In this session, I'll be covering three things. What's included in the definition of salary? What are the deductions that you may take? And what are the exemptions, the most important exemptions that you may claim under the head salary? On the left part of your screen are the inclusions. These are 100% taxable and no exemption is available. Note the 7th and the 8th part. The interest to RPF is taxable only if given more than 9.5%, and employer's contribution to RPF is taxable only if it is more than 12%. On the right part of your screen are some key points you should keep in mind. Salary to a partner of a firm is taxable under the head Profits and Gains from Business and Profession. This is because there is a specific inclusion in section 28. Second point, if salary is given for employment outside India, it is never taxable in India because the place of service is outside India, hence it is accrued outside India. There is, however, one exception to this rule. If the salary is paid to an Indian citizen by the government of India for employment outside India, then it will still be taxable in India. There are only two deductions available under this head. One for entertainment allowance. This is available only to a government employee and it is given to the extent of the lowest of the actual amount, 1/5 of the basic salary of 5,000. Professional tax is available to all employees. The deduction is equal to the amount paid. There can be two scenarios. If the professional tax is paid by the employer, then first add it to the salary because it is a perquisite and then deduct. If it is paid by the employee, then directly deduct the amount paid. Now let's get into the exemptions. The first exemption is under section 10(5) for leave travel allowance. The second exemption is under section 10(10) for gratuity. The logic for 15/26 is that it is 15/30 minus 4 holidays in the month. If you're not covered by the Payment of Gratuity Act, then the 4 days deduction is not given, hence it is 15/30, or in other words 1/2. Also note another important point. In the first scenario where you're covered by Payment of Gratuity Act, the definition of salary is basic plus dearness allowance, which includes all kinds of DA, whether included in the retirement benefits or not. There was a recent change for this, and the 10 lakh in clause B has to be replaced by 20 lakhs only for gratuity which is received on or after 29th March 2018. So if you're writing the exam in November 2018, then only for the last 3 days of the previous year 17-18 will you consider this change. The third exemption is for commuted pension under section 10(10)(a). The fourth exemption is for leave salary under 10(10)(a). Note that it has 4 clauses. The definition of salary in the third and the fourth clause, clause C and clause D, are the same. If leave taken is not given to you, then see the note for the calculation. The next exemption is under 10(13)(a) for housing rent allowance or HRA. Note the other conditions. In case you are not an employee, or you're an employee but you're not receiving HRA, you can go to section 80GG and claim a deduction under that section. But remember, the conditions under 80GG are more stringent. The last exemption is called special allowances. There are 2 categories in that. The first category on your left is the allowances that need to be spent in order to claim the exemption. So in other words, If you do not spend this allowance received by you, it will be taxable in your hands. The right part of your screen shows the allowances that need not be spent to claim the exemption. That means these are allowed irrespective of spending, or in other words, a flat deduction will be given as long as you have received the allowance. Spending is not a criteria. Thanks a lot for watching. Please watch part 2, which covers perquisites, and do subscribe to my channel for more such videos.